It is now 9:30. I think we should start with our meeting. Allow me to welcome everybody who managed to be in the meeting. I see the honorable members are in the meeting, and I see Honorable Sapo is also in the meeting, but I know she must be busy with her exam. She must be preparing so that she does not fail. We want to be invited, lady, to come and grace you during your graduation. So I don't know if you are here. Will you have time to prepare for your exam? I remember I signed your form so that we can free you from work of parliament. But anyhow, if you think you can manage, we are happy. We welcome you. Welcome, honorable members. I must also welcome our colleagues from the department. I don't see the minister and the deputy minister in the meeting, or maybe because today we are with the Treasury. Anyhow, allow me to say the meeting is officially opened, and the purpose of this meeting is to be able to attend it so that at the end we are able to assist our community entrepreneurs and everybody who will be in need of help from the department. So on that note, allow me to take you to item number 2, item that deals with apologies. Secretary, over to you, sir.
Good morning, Chairperson. Good morning, honorable members. Chairperson, the apology that I have received, it is from Honorable Mlozane, who indicated that she is flying back to Cape Town, then she might join the meeting around 10 as soon as she lands. And also there was an apology from the side of the Department of Small Business Development that the minister is with the cabinet meeting today. So those are the apologies that I've received. However, in the platform, we've got Honorable Sapo, Honorable Matulela, Honorable Kruger, Honorable Ngozi Tuli, Honorable Singh, Honorable Mafahani, Honorable Njaba. So those are the members so far that are in the platform, Chair. Thank you very much.
Okay, thank you very much, Secretary, for assisting us with the item that deals with the apology. We welcome the apologies that we have received. Let's hope we will see the Honorable Member Molozani before we knock off or before we finish our meeting. Thank you very much, Honorable Members. We're moving forward to the next item that deals with consideration and adoption of the meeting agenda. I would request that the Honorable Members assist on this item. I'm checking on the list of the participants so that I see your hands, Honorable Members. King, didn't you forget the apology from Honorable Bilankulu? She's having a bereaved in the family. They're having a funeral. Her sister-in-law passed on, so she left yesterday after the debate. Please note it. Honorable Kruka, I see your hand, sir.
Madam Chair, I'm sorry, I missed you by my network is not, I don't know what's happened with the network here in Acacia sometime. But are we on the approval of the agenda yet or not?
Yes.
All right, so I propose that the agenda is
Be adopted.
yeah, as tabled. Thank you.
Thank you very much, Honorable Kruka. Anybody who wants to support the move of the adoption of the agenda? I see the hand of Honorable Mafagani.
Yes, good Chairperson, good morning, honorable members and everyone in the meeting. I move to support the move of the adoption of the agenda by Honorable Henry Kruger. Thank you very much.
Thank you very much, Honorable Mafagane. She has moved in support of what the Honorable Kruger has raised. Thank you very much. The meeting agenda is being adopted as it is. Allow me, honorable members and the colleagues, to welcome the people from the National Treasury. And we are on their item. I don't know who's going to take us through. Let me allow Treasury to then assist us and take us through on this item of the years. Over to Treasury.
Thank you, Chair. And good morning, Chair. Good morning to all the honorable members, including the colleagues that have joined us today. My name is Alvina Taylor. I'm from the National Treasury in the Tax and Financial Sector Policy Division. I'm responsible for market conduct and inclusion. I'm joined by Nontobeko Lubisi, Director responsible for financial inclusion, supported by Tandu Prolo. And we are also joined by colleagues from the Prudential Authority, Bonisi Lemputela and Olautse Matani. They are in their policy, statistics, and industry support, as well as Elise Mayber. We also have chair colleagues from the OCPO, Office of the Chief Procurement Officer, who made a presentation in November last year. They're also here should there be any follow-up questions for them. So from our side, we will deal with the items as listed on the agenda. And thank you for this opportunity to present to the committee. If I could ask that Tandu Prolo be made co-host so he can navigate the slides for us, Chair.
Okay, Secretary, assist. In the meantime, Alvina, let me welcome you in our meeting and your colleagues, as you mentioned them. I was trying to write their names as you speak, but I could notice that I failed to hear other names. So let me just say all of them are welcomed. Thank you very much, May Alvina.
Thank you. Thank you, Chair. I will switch off my camera for now while I wait for the presentation to be flighted. Okay, thanks. Thanks, Tando. Chair, as you've noted in the agenda, we'll speak to the status of the Cooperative Banks Act amendments. I will handle this item. The next item on National Treasury's role in increasing access to funding for MSMEs and cooperatives will be handled by Nontobeko Lubisi. So just before we start, I would like to mention, Chair, that these are still draft amendments or proposed amendments that we will be presenting today. They still require ministerial approval. Then they will be released for public comment. Only thereafter will the executive or the parliamentary process follow. So these are still very much in a draft format. And we have the Prudential Authority here because the amendments are largely to streamline the regulatory or the supervisory framework. So if we can start, Tando, with the regulatory framework slides, which is slide 4. Thank you. So we have two main categories, which are cooperative banks and cooperative financial institutions, or CFIs. Both fall under the Cooperatives Act of 2005 and the Cooperative Banks Act of 2007. Cooperative banks have had regulations since 2009 and rules since 2010. An important milestone was in 2013, where the amendment through the Financial Services Laws General Amendment Act happened, which gave the South African Reserve Bank authority to regulate all cooperative banks. So for CFIs, a key development was with the Twin Peaks reform, where there was a consequential amendment which became operational in 2018 and inserted Chapter 7A into the Act. So effectively, we have a dual framework with cooperative banks under a longer standing regime and CFIs, or cooperative financial institutions, under newer provisions. Next slide. So we've had the Cooperative Banks Development Agency, or CBDA in short, which was originally established to help financial cooperatives transform into fully fledged cooperative banks. This agency played an important role in providing technical assistance, training, and capacity building. However, in October 2024, the CBDA was merged into SEDFA, this new Small Enterprise Development and Finance Agency. This was through the National Small Enterprise Amendment Act of 2024. So this has been part of a broader consolidation effort. So as a result, the Cooperative Banks Act was amended to remove the CBDA, the Cooperative Banks Development Agency, whose functions are now housed within SEDFA. Next slide. So this table gives us a side-by-side comparison of CFIs, cooperative financial institutions, and cooperative banks. There are some important distinctions that we can highlight here. So on registration, CFIs need 100,000 rands in share capital and 200 members, and they must apply. So CFIs must apply to become cooperative banks once they reach 5 million rands in deposits. Cooperative banks, on the other hand, will be moving to a 5 million rand deposit threshold going forward. A key deposit, therefore, is the deposit limits. CFIs are kept at 50 million, while cooperative banks have no limit. On deposit insurance, cooperative banks are covered in phase 1 of the deposit insurance scheme, but CFIs are not covered. On resolution, cooperative banks fall within the formal resolution framework under the Financial Sector Regulation Act, while CFIs are resolved through the Cooperative Banks Act provisions administered by the Prudential Authority. These distinctions are important because they shape how we think about the regulatory amendments that I'm about to take you through. You can go to the next slide, Thando. So moving on to why the amendments are needed. So when the Financial Sector Regulation Act was enacted and prudential regulation moved to the Prudential Authority, the Cooperative Banks Act was amended to include Chapter 7A for CFIs. But this initial amendment didn't go far enough because it didn't fully align all the critical provisions with the operational realities that CFIs face on the ground. So we are now working through a more, you can say, comprehensive set of amendments to close those regulatory gaps. And I will take you through those amendments. You can go to the next slide, Thando. On this slide, there are 4 key amendments. The first one is that we are updating the definition of a CFI, again, cooperative financial institution, to include the common bond requirement. This requirement is currently only in the exemption notice, but we need it to be in the Act because this common bond is fundamental to how CFIs operate. Secondly, we are inserting a new subsection in section 40C to give the Prudential Authority the power to grant registration subject to written conditions. Currently, the section only lists requirements, but doesn't give the Prudential Authority flexibility on conditions. Thirdly, we are amending section 7 to let the Prudential Authority to prescribe requirements for deposits, membership, shares, and other criteria for cooperative bank registration. Then number 4, we are inserting a new section to prescribe which banking services a CFI may provide. Currently, there's no provision in Chapter 7A that defines the scope of deposit taking for CFIs. This is again covered in the exemption notice, which is not ideal. Continuing with the proposed amendments, next slide. The definition of banking services needs to be broadened. Currently, it only covers services provided by cooperative banks, so we need to extend it to include CFI services as well. Similarly, the definition of managing director is limited to cooperative banks and needs to apply to CFIs as well. We are proposing to allow different types of CFIs to be registered, specifically savings-related CFIs and savings and loans CFIs. This would mirror the category that we allow for cooperative banks. We have savings-only cooperative banks and savings and loans cooperative banks. So related to that, we are also including a conversion of registration. This also applies to cooperative banks. Cooperative banks can do this. So we need to then allow CFIs. So if there's a savings only CFI that needs to convert to a savings and loan CFIs, that conversion needs to be enabled. Next slide, Tando. So this is a practical change, but it's quite important because currently the Act requires cooperative banks and CFIs to bear the costs of preparing reports requested by the PA, Prudential Authority. So here we are proposing that this expense should instead be borne by the Prudential Authority. The rationale is twofold. Firstly, from a financial inclusion perspective, we don't want to burden these smaller institutions with the additional costs. And secondly, this provision removes the burden or the administrative complication for the PA around granting exemptions from this requirement. So it's a straightforward change, but one that will make a difference for the CFIs and the cooperative banks. Next slide is a streamlining measure. So here, section 52, subsection 2, which currently requires the Prudential Authority to send a separate annual report to the minister on its activities under the cooperative banks, is being amended or removed. So here, because the PA, Prudential Authority, already reports on these institutions in its regular annual report, which is tabled in Parliament alongside the sub-annual report. So this separate reporting is redundant and is burdensome, and it duplicates effort without adding value. We are therefore proposing to delete section 52, subsection 2, to eliminate this unnecessary burden, because such reporting would already be included in the annual report that is tabled in Parliament. Next slide. This is a structural amendment. We are proposing to insert a new provision that makes key sections of the Act apply mutatis mutandis, that is, with necessary modifications to CFIs. These include fit and proper person requirements in Section 9, constitution requirements in Section 13, duties and details of directors in Section 16 and 17, auditor functions in Section 18, document submission in Section 19, prudential requirements in Section 20, the provisions on inability to meet those requirements in Section 21, prohibited transaction in Section 27, and the amalgamation or transfer provision in Section 29. The goal is to ensure that CFIs are subject to the same governance and operational standards that cooperative banks are subject to. Building on the previous slide, we also need to include CFIs under Chapter 11 and 12 of the Act. Currently, general offences provisions, certification of documents, access to records, regulation-making powers, civil liability of directors, and exemptions, all these reference cooperative banks only. So this amendment will ensure that these provisions cover CFIs as well. This is essential for creating a complete and consistent regulatory framework across the entire financial cooperative sector. So moving on to prudential standards, I'll address why they are urgently needed. So regulations for cooperative banks and supervisory rules have not been updated to reflect modern governance and risk management practices, meaning that they are essentially outdated. The financial soundness requirements have therefore remained unchanged for over a decade. So here, some CFIs might actually handle more complex operations than some cooperative banks. So the regulatory framework needs to be more sophisticated or move with the times that are changing. And the Prudential Authority has the mandate under the Financial Sector Regulation Act to update these regulatory prudential frameworks through prudential standards. And that work is now underway. And next slide. So how is the Prudential Authority approaching this? The Prudential Authority has reconceptualized its approach based on supervisory experience and stakeholder comments on the 2021 draft standards and recommendations from the World Bank strategy paper, which was commissioned by the National Treasury. So instead of regulating by form, whether you are a CFI or a cooperative bank, the new standards will regulate based on actual risk. Institutions will be grouped into basic, intermediary, and advanced categories, each with proportionate requirements for financial soundness. So, not only financial soundness, but also governance, registration, and risk management. So moving on to the last slide, Tando. So there has been 4 draft prudential standards that were released for informal consultation in 2023, covering registration, governance, risk management, and financial soundness. Feedback has been considered on these draft prudential standards. and revised standards will be released for formal consultation in 2026. And governance requirements will then move to a joint standard. And these standards, before being promulgated, they will also be submitted to Parliament for consideration. So, Chair, honorable members, what is largely being changed here is to streamline the regulatory approach between CFIs and cooperative banks, to remove any complexities when it comes to supervision by the Prudential Authority and any unnecessary burden on the side of the institutions themselves. So we'll now shift our focus to Treasury's role in supporting MSMEs and cooperatives, and Nontobeko Lubisi will speak to this. Over to you, Nonto.
Sorry, Noto was kicked out and she's trying to come back in. She's in the lobby, so if someone can let her in.
Okay, Secretary, please assist. Is she the only one who is familiar to this a part of presentation?
I can start, Chair, if she's still not back in.
Okay, thank you very much. Sis Alvina, please continue.
Okay, thank you, Chair. So our work is largely anchored in Pillar 3. So Treasury has a national financial inclusion policy, which was endorsed by Cabinet in 2023, if I'm not mistaken. So this largely focuses on improving Pillar 3, on improving enabling foundations through a more diversified provider and distribution base. Under Pillar 2, it addresses MSME financial access. Priorities include broadening financial instruments, promoting transaction account usage, providing suitable insurance, building payment options, strengthening credit infrastructure. Excuse me? Okay.
Okay, you may continue now.
Okay. So critically for today's discussion, enabling and strengthening the capacity of new and small financial institutions with increased focus on financial cooperatives and developmental microfinance sector. So this is the policy foundation that connects the regulatory framework that I've just spoken you through with the practical challenge of getting finance to small businesses. Next slide. So the policy is now being translated into a national financial inclusion strategy, or what you call in short NFIS. We have established a number of technical working groups. Each working group is led by relevant departments. For example, for MSME, the TWG, or that technical working group, is co-led by National Treasury and the Department of Small Business Development. We've started this work in April 2025, largely to validate the challenges identified in the policy and to develop targeted interventions that would move the sector forward. So the proposed solutions integrate findings from DSBD's MSME and cooperative funding policy, along with work that has been done, or that is currently being done actually, by BASA, the Banking Association. The presidency is also leading on a small business work group and other stakeholders. We are working closely with the technical assistance from the World Bank to create a comprehensive action plan that would operationalize both National Treasury and Department of Small Business Development policies. This is moving from policy. We're moving from a policy, strategy, and then execution. Next slide. So an example that we have, excuse me, is how National Treasury has stepped into supporting MSME, medium, small enterprises. When CIFA was integrated into SEDFA, the Kula Credit Guarantee Scheme, or KCG, was changed from a Schedule 2 to a Schedule 3B entity. That meant that it could no longer issue guarantees without ministerial authorization. So new operations effectively came to a halt. So National Treasury then had to step in to secure the approval from the Minister of Finance to allow Kula Credit Guarantee Scheme to continue operating. This matters because credit guarantees are what qualify micro, small, and medium enterprises for commercial funding. So without state backing, financial institutions are likely to reject applications from MSMEs. So getting this resolved was critical on our part because we needed to maintain capital access for small businesses. So another major initiative is the Movable Asset Collateral Registry, or MACR. The challenge here is quite severe because less than 5% of MSMEs have immovable assets like property that can serve as traditional collateral. And just over 30% have movable assets like machinery and livestock, but most financial services or financial service providers do not accept these. And over 57% have no collateral whatsoever. So the IFC is supporting South Africa to develop a movable collateral registry that would allow MSMEs to use movable assets to secure funding. So here we have an interministerial steering committee that has been constituted, and this committee includes DSBD, DTIC, National Treasury, Department of Justice, National Credit Regulator, and SEDFA to coordinate implementation in terms of how we allow MSMEs to use or movable assets to secure funding. And we think this could be transformative for MSMEs to access funding. To wrap up, we'll bring together a picture of how the regulatory handles are being addressed through intergovernmental collaboration. So on policy, we are operationalizing the financial inclusion policy through the financial inclusion strategy and establishing mechanisms like the Cooperative Development Fund within SEDFA. On legislation, the Cooperative Banks Act amendments were discussed. They are progressing through an agreed intergovernmental process. And on regulation, we have the Prudential Authority, which is handling safety, soundness, licensing, and supervision, while the FSCA focuses on conduct regulation. treating customers fairly, concurrence with the PA, and financial literacy. Then we have SETFA on industry support, and SETFA continues to provide capacity building and sharing necessary tools to ensure that the sector moves forward. So a key message here is that all this is not happening in isolation. It's a coordinated effort across multiple departments and agencies to ensure that we create an enabling environment for CFIs, cooperative banks, and MSMEs. Next slide. So these entities and agencies that I've mentioned, the PA, it's largely the PA, National Treasury, and SETFA. Following the meeting in November last year, we then decided to form a committee that would address all issues or regulatory hurdles that involve CFIs and cooperative banks. We will bring FSCA on board, or actually they are on board already. It's FSCA, SETFA, PA, and National Treasury. We'll meet on a regular basis to address any pending challenges, to advance, also to assist in advancing the implementation of the financial inclusion strategy. Last slide. So we also have Nontobeko, who is on the board of SETFA, representing the minister. So here, this reinforces National Treasury's commitment to increasing access to funding for MSMEs and cooperatives. That is the end of our presentation, Chair and honorable members. We are happy to address any clarity-seeking questions or any other matter that you think we should focus on and take forward in ensuring that the sector serves the public rightly. Thank you, Chair.
Thank you very much for the presentation, Alvina. We have got an indication that Non-Tolibisi is in the meeting room. So I want to check if ever there's something, or maybe if ever she has an addition, we can then give her a chance before I allow the honorable members to interrogate the presentation. Nonto, do you have anything for addition on the presentation? Especially on your part where you were supposed to take us through. If yes, over to you. Unless if he was kicked out again. Is Nonto in the meeting call?
Yes, Chairperson, her name is there.
Okay. Sisi, can you hear us?
It's just that she's not audible.
Try to unmute. Yeah, maybe she is having a problem of network. So on that note, let me allow the honorable members to then interrogate the report as presented before us by Alvina from National Treasury. I will check on the show of hand. I see the hand of Honorable Kruger. Honorable Carol Mafagani will be number 2. For now, in that order, as I note the other honorable members.
Thank you, Madam Chair, and thank you for informative presentation. And good morning to all the colleagues and everybody on this platform. Madam Chair, yes, for the first time, I'm very exciting about the movement that takes place to get this cooperative bank on the road, and the cooperative bank and the CFIs to the benefit of our cooperatives, because we all know that cooperatives are, of course, for our people, especially in the rural areas, the communities are one of the instruments for them to start a business and get everybody involved in a community. So, as I say, I'm excited. And what I don't want to ask any questions. I just want to ask my colleagues that sits in this committee that we pressurize our colleagues in the committee of the Treasury, so that we push for this bill, because the bill must come from their side, and push them so that we can have inputs in the bill, so for the benefit of our cooperatives out there trying to make a living. Thank you, Chair.
Thank you very much, Honorable Kruger. Honorable Carol Mafagane, over to you, ma.
Thank you, Chairperson. Let me greet honorable members once again and our visitors, and thank you for the presentation. I've got about one or two questions for them. The first question it will be, why is the regulation that requires CFIs to borrow within 15% limit of their asset not removed? Because the sector has repeatedly said it is a hindrance. As we speak, CFIs are not even allowed to participate in the CETFA wholesale lending program. And also, why have the number of share subscriber not reduced from 200 to 50 or less? Most countries do not have these requirements. Where does National Treasury get this from? The third question is, what is the logic behind the common bond? What value is it adding to the cooperative bank's ecosystem? And my last question will be, the committee is worried about the level of deregistration. The sector is not growing. Besides deregistrations, are there no other alternatives, like combining the struggling CFIs with the functioning ones? Thank you, Chairperson. I will wait for them to respond.
Thank you very much, Honorable Mafagane. Honorable Matulelo, over to you, ma.
Thank you very much, Chairperson. Honorable Babalo Matulelwa, deployed by Economic Freedom Fighters in this Parliament and in this Portfolio Committee. Chairperson, we note the presentation by the National Treasury on the amendments to the Cooperative Banks Act and the role of the state in the increasing access to finance for MSMEs and cooperatives. Chairperson, however, we remain deeply concerned that despite years of policy discussions, millions of small business cooperatives and township enterprises still cannot access funding. The presentation itself, Chairperson, confirms 57% of MSMEs that have no collateral, yes, while less than 5% possesses immovable assets that banks accept. So this exposes the reality that the current financial system continues to exclude the poor and the black majority. Sorry for that, Chair. We welcome the measures aimed at the strengthening of the cooperative banks and CFIs, Chairperson, including updated prudential standards and the inclusion of CFIs within the regulatory framework. But the regulations alone cannot solve the crisis of the access to capital. We need deliberate state intervention that prioritizes developmental funding instead of protecting the commercial banking interest. So imbuzo yam nje izabayi-2 kuphela. Ndifuna ukwazi into yoba i-Treasury, is it going to maybe are they coming outside of what they just presented to us? Are they coming with which new strategies okanye zeziphi indlela abazawusolva ngayo le nto ye-cooperative bank, Chairperson? Because abantu bethu ingakumbi abakwi-cooperatives kudala simane siyichaza into yoba i-cooperatives, they are a very successful okanye by progressive move for the economy. You remember that, Chairperson, we were in Germany for a study tour where we saw that with this model of cooperatives, the country can survive a very good, more especially for employment. Because remember, in Germany, we saw that it was only 3% unemployment rate, meaning with the cooperative sector and the model. And I remember the embassy for Germany, they were saying they've been calling even the minister, they've been reaching out to the government to ukuthi bakwazi ukuthi bathengisele South Africa the progressive approach for economic growth. So therefore, what are they bringing that is going to make it a point that this cooperative bank function, and how are they going to support it as a Treasury and make sure that our people because remember, and this thing has been proven that it is very progressive. So I want to know that, Chairperson, as well as I'm noting this report. I thank you, Chair.
Thank you very much, Honorable Matulela. Honorable Malimacha.
Thank you very much, Chair. Allow me to take this opportunity and do likewise. Appreciate the presentation. And I want to say I'm one of those that is convinced that MSMEs and cooperatives are the future. But for them to succeed, they will need two things. One might not be the duty of Treasury, but for the department and everyone at large to provide financial.
Did we lose Honorable Malimacha?
Ensure that what I said earlier is the future is realized.
Honorable Malimacha, if you can repeat, because we lost you. I don't think they heard you.
That's a very right spot. Am I correct? You hear me, Chair, now?
Yes, now you are audible, sir.
I'm saying I'm one of those that strongly believe that the MSMEs and cooperatives are the future. However, there are two factors that really need to be intensified. One, the first one might not be of Treasury, but of the department and others, that we provide good quality financial education. The second one is the backing of funds, as we are now engaging here and ensuring that that happens. Chairperson, in other comparable countries such as Ghana, Kenya, as at some stage we wanted to go there, or India, the cooperative bank sector is thriving. It's doing wonders there. Has the National Treasury examined experience and processes that make those countries successful in this regard? Have they done benchmarking with them and see what can be taken out of that and what can be improved so that at the end of the day, this must not fall? Are there registration and operational requirements of the cooperative financial institution as well as cooperative banks, not too enormous that constitute barriers to enter within the banking sector? So, because in many cases, if we are not careful of that, we can preach all this. But if we are not dealing with those barriers, people will see us as people who talk. It's like a thief during the days with you in the church, at night is doing something else. Because if we go and do outreach program and tell, here the funds are available, but in small letters, there are terms and conditions that becomes barriers, it becomes a problem, Chair. Let me continue to this one then. What are the safeguards against the risk of fraud or other malicious cyber crimes that are prevalent across the industry? I'm raising that so that when they deal with that, they clear us the Treasury. The regulatory body promoting this technological innovation to ensure success and operational sustainability of the MMCMEs. The guarantee around that all is transparent enough and accessible, so that at the end of the day, we must not find ourselves having to deal with issues that are not necessarily avoidable and are there. Then let me pause there, Chair, because I thought I will continue to want to know how many cooperative banks have been established since the Cooperative Banks Act of 2007 and the now defunct Cooperative Banks Development Agency. I'm asking this because sometimes we go deeper into this, you'll find out the number does not match the population in the country. Alternatively, how many cooperative financial institutions have graduated or transitioned into a formal and fully fledged bank since the proclamation of the Act? Thank you so much, Chair.
Thank you very much, Honorable Malemacha. Those were the hands. I don't know if ever maybe there's one other hand that I did not notice, Secretary. If those were the hands, let me
Yes,
thank the.
Chairperson, it's Honorable Singh.
Okay, Honorable Singh, over to you, ma.
Good morning, Chair, and thank you for the opportunity. Chair, I have quite a bad network, so can I just ask if I'm audible?
You are audible, ma.
Thank you very much.
And
Chair,
visible.
thank you. Chair, good morning to all on the platform. Firstly, I would really like to welcome the presentation, and I definitely think that we are going in the right direction. Chair, I know this presentation is still has a long way to go. This proposed amendments, I know it has a long way to go in terms of cabinet approval, public comment, and the like. But right now, I'm grateful that it has come to us at this stage. Chair, like I say, I largely welcome the presentation, but I do just have some concerns in that we may have some unintended consequences of certain of the provisions without the necessary safeguards being put into place. And I just want to raise some of those questions. So it is proposed that there will be a phasing out or reducing of experience requirements for certain categories of MSMEs in public procurement. So what safeguards will be put into place to ensure that this does not compromise service delivery, project completion, or value for money? We also have an amendment, a proposed amendment to phase out financial capability requirements for MSMEs on state tenders, and this could significantly increase procurement risk How does Treasury intend balancing MSME inclusion with the need to ensure contractors remain financially capable of completing projects? It is also proposed that they would be outlawing the sale of tender documents and making all tender documents downloadable from the e-tender portal. Has Treasury assessed the administrative and financial implications of making this mandatory across all spheres of government? I think it's a good initiative, but we must understand what the administrative and financial implications are. Then the proposal to phase out compulsory briefing sessions unless strictly necessary may improve accessibility for MSMEs. However, how will Treasury ensure that bidders still receive adequate technical and site-specific information for complex projects? Then, Chair, there is the proposal that supplier rotation policy aims to broaden participation opportunities. How will Treasury prevent supplier rotation from undermining continuity, institutional knowledge, quality, and long-term value for money? The presentation also proposes deliberate preferential procurement criteria favoring MSMEs, cooperatives, and local manufacturers. What safeguards will exist to prevent abuse, fronting, politically connected procurement networks, and reduced competition? Chair, I have quite a few other questions, but I think I'm just going to stop on the last one where it says the presentation also proposes ring fencing procurement opportunities in areas such as school, nutrition, hospitals, prisons, and barracks for specific MSME categories. Has Treasury assessed the operational, constitutional, and competition implications of these proposed set-asides? So I think, Chair, in the main, we're going in the right direction. My concern is around governance, around certain safeguards that we need to have in place, and that we don't prevent healthy competition. And instead of making our MSMEs and cooperatives sustainable in the long run, we're going to end up creating a system where they can only function if they are always dependent on the state. And then I think that is defeating the purpose. So my concerns generally surround that kind of reasoning. Thank you, Chair.
Thank you very much, Honorable Singh. I did not see you when I was welcoming the honorable members in the meeting. You are also welcomed. Thank you very much, Honorable Malimaja. You have touched on a very important issue or matter where you were saying the MSMEs are the future. And if the future does not have money, how will they then control their future? It will be a problem. I'm saying this because up to so far, the state has not only failed to offer protection to the small business people, it looks like they are destroying their business because of lack of funds. So I have a proposal to make that the department make enough so that they end up assisting the small business people. If we are saying they are the future, they must move with speed, with no stress, having the funds for their projects. The honorable member touched on the issue of financial services for vulnerable individuals. I won't touch on it. I will wait for the response with regard to immovable assets and where you are talking about the collateral, where they don't have the collateral. So the other question is that on the MSMEs, there is a lack of capital access, as I've said it, or maybe let me leave this one because it will be a repetition to what I was saying. Now, the other question will be that how does the prudential authorities guarantee the protection of depositors to ensure that savings are protected in case of fraud or insolvency? Are the regulatory standards and risk-based approaches not prohibitive? of the development of cooperative financial institutions and cooperative banks in their current form. The last question is that recently there are emerging retail banks and digital banks that are entering the banking system to serve the underserved. However, the cooperative and mutual banks are not developing at the pace and scale that is required. What are the prevalent barriers in this context? Thank you very much. We'll wait for the responses. Over to you, Sisi Alvina.
Thank you.
My
Thank you,
apologies,
Chair.
Chair.
Okay.
My apologies. As we have indicated that Ms. Sapo is to attend the class, she has sent me some question on a WhatsApp. I don't know whether I can read it to the National Treasurer, or she requested that there are issues that she wanted the NT to address.
Okay. We have ample time. I can allow you before we go to Sisi Alvina.
Okay. This has been sponsored by Honorable Sapo. Number one question says she requests NT to address these questions. Number one, what are the implications on ordinary citizens who are CFI's members, as CFIs are not yet included in the deposit insurance? That will be the first question. The second one, what will it take for CFIs to be included? Number three, in 2017-18, upon the promulgation of Financial Sector Regulation Act, the sector was informed that CFIs will be included in Phase 2 of the CODI implementation. It's been almost 8 years now. Do you have a date when this institution will be included? The fourth one, what are the main reasons for CFI's exclusion from CODI? The last one, fifth question, if CEDFA were to resolve those through the My CBI banking platform, skills deployment in the CFIs, strengthened compliance, will they be included? Those are the questions, Chairperson. Thank you. From Honorable Sap.
Okay, thank you very much, Secretary. And thanks for raising those questions, because they are very important, and we'll also want to hear the responses from the department. Sisi Alvina, you may take us through, ma. Thank you.
Thank you, Chair. And thank you for Honorable Kruger, the comment. So the questions, Honorable Chair, I will ask Unontobeko to start on the collateral capital and movable asset collateral registry initiative. She'll be followed by the Prudential Authority team, maybe Kalai on the 15% borrowing, the 200 member shares, and common bond, and the level of deregistration. And also maybe the last questions that were raised now on behalf of Honorable Sapo on the deposit insurance. And Nonto also addressed the new strategy that Treasury is working on to resolve co-op bank issues. The procurement-related questions raised by Honorable Singh. We have Willie Matabula from the Office of the Chief Procurement Office. He will come in last on Honorable Singh's questions. And also Honorable Dikhale's question will be addressed by address those Kalai on the PA's role I think those are mostly questions. So Nonto, Kalai, and then lastly Willie. Thank you, Chair.
Okay.
Thank you, Alvina. Thank you, Chair. Good morning, honorable members. Apologies for my bad connection this morning. Regarding Honorable Matulela's question on issues of access to capital, and more especially the work on the movable assets collateral registry. So it's just, I think most members have alluded to the fact that we are moving in the right direction, though the pace might be slow. And with the movable assets collateral registry, it's the same situation whereby we have, as the National Treasury, gone to Nigeria, and we've gone on a benchmarking exercise together with the Department of Small Business Development to check how Nigeria implemented its collateral registry. And where we are in South Africa at the moment, we have a steering committee which has been established that will look into reforming the legislative framework around recognizing movable assets, because currently we do not have that legislation in South Africa. So we have a steerco which then has 3 subcommittees that are looking at how do you then put a movable assets collateral registry in place. So the best thing that we've then decided is that we will work under 3 phases. So the first one being the legal framework, where you
Chairperson?
we then have a
Chairperson?
thank you.
Oh, okay.
Am I audible, member? Sorry, I had muted.
It's fine. I think you are audible now. In fact, I wanted to request through Chairperson that maybe you switch off the mic because your bandwidth is low. Through you, Chairperson.
My band. Am I audible now?
You are. Just keep your camera off.
Okay, thank you, members. So with the movable assets collateral registry, we have 3 subcommittees that have been established. There's one that looks at the legal framework. That is where we're going to review and recommend adjustments to current laws and regulations that will then enable us to start recognizing movable asset financing in South Africa, because currently there is no legal framework that allows us to recognize movable assets. Then we have another committee then that looks at designing the registry itself. And what they are currently working on now is basically scoping and sizing the market for movable asset financing in South Africa. And one can really almost predict that it will be quite large because of the numbers that Alvina presented earlier around how many people actually have immovable assets that they can use as security. We know it's not quite a lot, so we can almost predict what will happen here. So this committee will identify the considerations relating to the terms, costs, and resources for actually deploying an effective movable registry in South Africa. Another committee that has been established is the one around awareness and sensitization, because we realize that it will be a new
thing that we're introducing in South Africa. So you will need some form of public awareness, as well as some form of training for the officials that will be responsible for really deploying the tool. So it's not necessarily only the public sector officials, but this also goes more into the FSPs, because we are actually, one can envisage that non-bank financial institutions will be in essence interested in this kind of taking up these initiatives. So those are the committees that we have then said we are establishing to make sure that we ultimately come up with the model in South Africa. It has taken Nigeria almost 8 years or so to put a movable assets collateral registry in place. We are at the inception phase, but I think through this initiative, if we all work collaboratively with the Department of Small Business Development, we will make strides in putting this one in place. Regarding Honorable Male Macha's questions around the issue around SMME financing requiring more or everyone to be involved, we agree with that. And what the National Treasury has done, the DG of the National Treasury has established a Financial System Council of Regulators in line with Section 79 of the Financial Sector Regulation Act. And this committee is quite crucial for financial inclusion, because it basically ensures that you have the DGs of the most relevant department, as well as the CEOs of the financial sector regulators, meeting on a predetermined basis to talk about issues relating to financial stability, inclusion, and transformation in the financial sector. And for us, we believe that this structure, for us to actually realize, to make sure that the existence of the council exists, was quite an achievement for the National Treasury, because as Honorable Male Macha has alluded, is the fact that financial education is a critical issue to ensure that the cooperative sector, as well as the small business sector, thrives. And by virtue of us having established the council, where you've got the relevant CEOs, which is actually quite a high-level structure, sitting and talking about issues of financial inclusion and transformation in the country, we believe that in that way we would be able to make better strides than what we have done in the past, where we are actually able to have, high-level representation talking about these issues. And in this structure, we also have, for instance, the CEOs of the National Consumer Commission, which we actually feel that is also a critical stakeholder and fitting in with what Honorable alluded to around issues of safeguarding the financial system and issues of fraud and cybercrime. So we believe that by virtue of actually having the structure, moving from the technical working groups that we've composed at a more specialist level, feeding into a financial system council of regulators where CEOs and DGs sit, we will in essence make better progress and ensure that there is cooperation and there is duplication is also minimized. I will think I've covered the ones around coordination, cooperation, but I can come back if there is one that I've left out.
Thanks, Danto. PA, Kalai Bonisile.
Good morning to the Honourable Chair and to the Honourable Members, as well as my colleagues from the National Treasury. My name is Kalai Naidu and I'm from the Prudential Authority, and we are responsible for the regulation and the supervision of the CFIs and the cooperative banks. So I want to take the questions just regarding the architecture and how we set up the cooperative banks and the legislation. So the first question around the prudential requirement of the 15% limit that is set on external credit. So this historically was the limit that is set in the regulations. And as Alvina had indicated, the view of the Prudential Authority is to rather regulate and supervise CFIs and cooperative banks based on the actual risk, also on their business model and the manner in which they are progressing as a CFI and a cooperative bank. So the intention, although this 15% is now set in ministerial regs, is for us to withdraw the ministerial regs and to start issuing the prudential standards. And these prudential standards cover risk management and financial soundness. And one of the financial soundness indicators is the limit on external credit. Now, the reason there is a limit on external credit is really to ensure the safety and soundness of the institution. So a CFI and a cooperative bank is a community-based institution. It really relies on the members placing deposits within the institution, and then the members using their deposits to on-lend. So where we allow external credit, it does pose a risk into the books of the CFI and cooperative bank. Should, for example, there be a default and there's not enough funding from within the members to be able to pay the credit, it is limited to 15%. That being said, it is the intention of the Prudential Authority to look at the actual risks that are proposed by the CFI and cooperative bank. And what we're putting out in our prudential standards, the draft has been published, is for the Prudential Authority to not set this as a requirement, but actually to allow us to increase that particular limit where we are of the opinion that that particular CFI or cooperative bank is very sound in its other financial indicators, where there's good governance, where there's good risk management. And just depending on the model, we will then look at opening up that limit. So it's not set at 15%. If you look at the other question around membership, so again, we have to go back to the cooperative principles on which CFIs and cooperative banks are based. So one of the key principles is that it's a member-based organization. So it's the members that drive the organization. And this also touches a little bit on the common bond. So what we want to see is that we want to see that there is enough buy-in and there's enough support by the members. So historically, again, the limit for members was set as 200. And what we have asked is for the amendments to be made to the Cooperative Banks Act to allow the Prudential Authority to set the limits in terms of membership. But what we must also understand is that where you allow a CFI and a cooperative bank with members that are smaller membership, it will only serve those members. So if you set it at 50, for example, or starts up at 50, it will only serve the 50, and then it can obviously grow. However, we are placing quite a number of regulatory requirements on a financial institution that is serving 50 members. So there's stringent requirements that we're going to place on these institutions to ensure that they have good governance, that there's good risk management, and that they're financially sound. So when CFIs are registering, they have to be aware that there's stringent requirements, that they should be able to build their membership in order to sustain their business model in terms of the deposits that they take, as well as how much they lend to their members. And that's fundamentally the model in which they've chosen to operate. So again, there will be flexibility around the membership, but we have to caution that if we allow very small financial institutions to register in a formal space, that they're going to be subject to quite stringent requirements. And also just to alert the membership that we do have, members can come together as communities and register stockpiles, etc., which are allowed to grow quite significantly and are not subject to some of the stringent requirements. So the number of members is a critical financial sector indicator so that we can allow sustainability and scalability of the model. However, as I said, that's something that we are looking at. In terms of the common bond, so again, the cooperative banks and CFIs very much community-based, and the common bond is really there to ensure that we are aware of who joins a CFI. So it's really a lot to do with the trust. So if you, for example, in a particular area, everyone knows each other, they hold each other accountable in terms of the deposits that's being made, how the deposits are being lent out, and also about how you repay. So it's almost holding each other accountable in terms of the way the CFI and the cooperative bank runs. That being said, the PA has not restricted common bond. So if you want to open up your common bond to include a bigger common bond, increase your geographical area, include more employers, if it's a common bond, is an employer common bond. So that we are amenable to, and we have said that to the sector. However, we haven't seen a flood of applications coming in to say that they want the common bond to be opened. So again, that's something that the particular CFI and cooperative bank, based on how sound they are being run, in the governance and their risk management, opening up the common bond is something that the Prudential Authority does allow. In terms of the sector and the growth of the sector, so what we are seeing, and definitely there is a large concern around this, and one of the indicators, or some of the indicators that we're seeing is about the business model. About how the business model needs to adapt to the economic situation. One of the honorable members mentioned the fact that we live in a digital age. And, does the CFI and Cooperative Bank have the systems, have the knowledge and the expertise to be able to then expand into, growing their business model? So the one is the business model and the scalability of that particular business model. Then we also look at governance. So that's a huge issue within cooperative banks and CFIs in terms of how they set up their governance structures, how they hold themselves accountable. The next issue is definitely capabilities and skills and development. So another member brought in the role of the CEDFA. The CEDFA has a critical role to play in development of capacity within CFIs and cooperative banks. The Prudential Authority is very cognizant of the fact that we cannot operate purely as a regulator without getting the support of the CEDFA. So the CEDFA has a critical role to play in developing the skills that the regulatory framework requires in order to ensure that there's sound governance and sound risk management. So capacity is another issue, as I've highlighted. One of the issues that we do hope that will be addressed by the banking system that CEDFA is trying to deploy is around data. So customers' records, customers' information is critical in order to ensure compliance and to run and governance and risk management. So one of the issues around the CODI, and I think that's one of the last questions, is the CODI was introduced not in 2017 through the Financial Sector Regulation Act, but it actually only became operational in 2024, more or less. So what we're seeing is in the last 2 years, there's been quite a bit of discussion around the inclusion of CFIs. So what CODI has done, it started off with the banking sector. So cooperative banks have been included. And you will see that a lot of work has been going on between CFIs and cooperative banks and the CODI around including CFIs within the CODI. Now, one of the issues is definitely the data. And we do hope that the banking systems that's being now driven by the CEDFA will assist these CFIs in getting their data to the level and to the quality that is needed in order for them to be onboarded onto CODI. So CODI does need very up-to-date data on who are the account holders, what is the covered deposit. So the covered deposit is the amount that is insured. So the CODI would need up-to-date information on that at any particular time, so that if there is resolution or there's distress in that financial institution, that the CODI can then assist from a deposit insurance perspective. So one of the critical issues there is around data, and we do hope that will be resolved. So it is the intention of the Corporation for Deposit Insurance to include CFIs in the next phase of their establishment. In terms of just the question around digital banks and fraud, so what the prudential standards are aiming to achieve, apart from just regulating according to basic, intermediary, and advanced models, is really to look at the risk profiles and to ensure that if you want to introduce, for example, a digital CFI or a digital cooperative bank, the prudential standards will then provide requirements on looking at cybersecurity, cyber resilience. How do you recover from a cyber incident? It will also look at IT and IT governance and risk management, which are critical areas in order to protect the actual depositor at the end of the day. I will stop there, Chair. If there are any, okay, but before I stop, I want to just also introduce the head of the Prudential Authority from a regulatory and policy perspective, Olawatse Matiane. She wants to actually just give some closing comments on the role of the Prudential Authority in regulating CFIs and cooperative banks. Thanks, Chair.
Yes, thank you, Kale. Good morning, honorable members. As Kale has indicated, my name is Olawatse Matiane, the head of department in the policy area in the Prudential Authority. So I just wanted to show my face, proof of life. I will switch off my video for bandwidth. So maybe before I get to the closing remarks, honorable members, I just wanted to also bring in some practical perspectives to the examples and the excellent responses that Kale has given. So maybe let's start with the 15% limit on external credit. I think here the idea was for the CFIs to realize that your cheapest form of funding will be your savings from the members. And practically what we had seen on the ground many years ago is that a CFI will come in and register. And in terms of, instead of mobilizing member savings, they would run and say that they want to borrow externally rather than focusing on the mobilization of member savings. And a practical example we had, there was a CFI in KZN, and the common bond there was taxi owners. Now, the taxi owners, at the end of the week, they took all their savings to a commercial bank, and at the end of the month, they want to come to the CFI and to borrow money. And there, the logic from a CFI model perspective did not work. You cannot then take your money to a commercial bank, but then expect your CFI to then fund your loans or your credit. So that's a very practical example of why the 15% limit was set. I think there is merit in terms of saying, is the 15% limit fair? I mean, Kale has indicated once we've taken this out of the legislation and into the prudential standards which are within our control, we can then debate the idea of whether the 15% is an appropriate limit. However, from a conceptual perspective, it is important for CFIs to learn and to realize that your first form and your cheapest form of funding will be your savings, and then also then generate income via loans to your members. So that's the 15% issue. The issue of membership moving from 200 to 50. So I think here, honorable members, the practical issue that I wanted to bring here is that banking it's a game of numbers. You are not going to break even with 50 members. Even at 200 members, most CFIs are struggling just to break even, because how do you generate enough revenue and enough income when you just have 50 members? And what we have done is that there is an exemption notice to say if 50 members want to come together, save together, they can fall under the exemption notice until a certain limit, I think until your deposits hit the 30 million mark. But the idea here is that banking is a game of numbers. The more you are, the more you can generate revenue, you can break even, and even go beyond break even and start to realize a surplus, which can then be shared with members. If you look internationally, I mean, you get very big credit unions. I mean, I think where you start to really start to break even if with a membership of 1,000 members and above. So even with 200 members, I think we are being very, very generous. And then lastly, on the common bond. So the common bond, first and foremost, it's a risk management tool. Secondly, at the core of the cooperative model is like-minded people coming together, because your products and your services are designed so that to serve the members. So for example, there is a CFI consisting of farmers. I don't know if it's still operational, consisting of farmers in the Eastern Cape. Now your common there is farm owners, people working in the farm, because as you design your products and services, they are related to what farmers need and what farmers do on a day-to-day basis. And also, as Kale has indicated, we are open to opening the common bond, however, still within a common bond. So an example is that when you have a common bond, you can come and request multiple common bonds to say, I want to open my common bond to another common bond. And again, just from a practical perspective here, honorable members, most of the CFIs that have gone under are those that came to the PA or to the then CBDA saying that they want to open their common bond. As a result, they lost handle from a risk management perspective, and then they started losing, because then, for example, if you've got a very large geographical common bond, you don't really know who these people are. And if they owe you, you don't even know where to get hold of these people. So as I said, first and foremost, the common bond is not only at the core of the model, but it's also a risk management tool. I think one of the questions that Honorable Member Malimeja asked was around, what are some of the lessons that we've taken from other countries such as Kenya. I think the one big takeaway from the Kenyan cooperative banking sector is the political leadership and the political support. When you get to Kenya, if you are a policeman, when you join the police service, you automatically belong to the police circle. It's a given, it's a non-negotiable. One of the largest cooperative banks or SACCOs in Kenya is called Mwalimu, which consists of all the teachers in Kenya. It doesn't matter where, in which region in Kenya you are, as long as you are a teacher, as you join the teaching profession, already automatically you become a member of a SACCO. So I think the unbelievable, political leadership and the political support. I mean, even the president of Kenya talks about cooperatives in general and cooperative banking. So for me, that has been the mark of why the Kenyan sector has been so successful. Because as I say, whether you're a teacher, whether you're in the police service, your membership into a SACCO is automatic. Now, maybe just some closing remarks to say, as the PA, we're now supervising and regulating both the cooperative banks and the CFIs. We continue to see challenges with the differentiation. Hence, Alvina in her slides indicated that we are going to move away from the form, not to say whether you are a cooperative bank or whether you are a CFI. We'll just have a continuum of tier 1, tier 2, and tier 3. And based on your activities and the risk that you bring into your system, then you will then be regulated and supervised accordingly. And lastly, also the questions around CODI, I think Kale have covered them very well. CODI has since 2024 just been focusing on getting the banking framework up and running. And I think as soon as the CODI team is done with that, they will then move on to phase 2, which is to include CFIs. And I think the biggest challenge with the CFIs has just been the operational efficiency, being able to definitively say, these are my covered deposits, these are the number of my members, and really tightening up from a record-keeping perspective, as Kale has indicated. But that work is underway, and CODI and the South African Reserve Bank is committed to including the CFIs in phase 2. So, honorable members, thank you very much for the opportunity. Let me stop here. Thank you.
Thank you, Ola and colleagues. Chair, on the last set of questions related to procurement raised by Honorable Singh, can we ask Willie Matebula from the Procurement Office to handle those? Over to you, Willie.
Thank you, Chairperson, and also good morning to the honorable members as well. And thanks for the questions that were raised by Honorable Singh. In fact, I think Honorable Singh was referring to the other presentation, Chair, which, based on the adopted agenda, was not presented, although it was submitted to the committee. But nonetheless, I will respond to it. I'm not so sure if the secretary to the committee can just fly to that presentation, and then I just want him to go to slide 10 of that presentation, the presentation on the Public Procurement Act from OCPO, so that we can give a context to even our responses. Thank you, Chair. If that could be presented. Otherwise, I can also try and present it from my side.
There is a request, Secretary. Please assist.
Can I make you a co-host, Mr. Mateula, so that it can be easy? I have to check it from the files.
Okay, let me check if I can present from my side. Just a second, I just want to check. Okay. Yes, that's fine. Just quickly check. If we can just present, I don't know, just want to check here if I can do it. Great. I'm not so sure if Chair, the presentation is
Yes, we can see the presentation. You may
that's great. Yeah, thank you, Chair. No, in fact, I've just gotten to that particular slide just to give the status of the development of the regulations based on the presentation that we made in November last year. Just for the information of the committee, the Treasury has already published the draft regulations for comments. And there are two sets of regulations. The first set, related to the establishment of the tribunal, the Public Procurement Tribunal, which we spoke about last year. And then the second set of regulations, which is a bigger set of the regulations, relate to the general public procurement regulations. Now, the first set, Chair, on the public tribunal closed already last week on the 15th, 2 weeks ago, it closed in terms of the public comments. But the other set, the bigger set of the regulations, are only closing on the 15th of June. So we've given at least 60 days for the public to submit comments. So that's just the status for now. And now to the issues that were raised by Honorable Singh, I think we will also be happy to take her comments, if at all, in writing. Will interact with the secretary of the committee to some of the questions that she's raised. But there is a very important issue that I must respond to, in as much as I'm not going to respond to all the questions that she's raised, based on the fact that we're still taking, comments on the draft regulations. But there's an important issue that Honorable Singh, seeks a clarification on, and that relates to subcontracting. And I think I must address that issue. It is contained in part 4 of chapter 5 of the draft regulations, which deals with subcontracting. Now, Chair, as we're going around during the public participation processes around the country, just before the the bill was adopted by Parliament, and eventually, as you know, that was sent to by the President, we got a lot of complaints, especially by subcontractors, and complaining about them not being paid on time or not being paid at all by the main contractors. And they end up, leaving, abandoning sites. And therefore, that has got a huge impact in the completion of projects across the country, infrastructure projects in the main construction sites and so on and so forth. Now, when we discuss this issue in our own thinking to see how do we address the issues of subcontractors not being paid and therefore leading to the infrastructure projects not being completed on time and so on, and the delays and so on. Then we decided that we want subcontractors to be paid directly. And that's what we provided for in the draft regulation, and for which we want the public to comment. To say, whereas whilst you're appointing a main contractor, but you pay the main contractor, but you also have to pay as an institution, government institution, directly to the subcontractor. That's what we've. It doesn't matter to us whether you, as a subcontractor, you are a nominated subcontractor or a selected subcontractor. Nominated, Chair, simply means that if a department or a government institution calls for a particular project and then appoints the main contractor, and that department has the power to then dictate to the main contractor to say, you shall appoint this particular subcontractor. And that is a standard practice in the construction space and infrastructure. So that particular subcontractor is nominated. So in other words, it's a nominated subcontractor. So it doesn't matter if the subcontractor fails or defaults in terms of a project, then the risk and the cost overruns, the delays and so on, is then borne by the government institutions, because that's that institution that decided to impose on the main contractor. Then the selected subcontractor is when, that's both the main contractor and the government institution that decide on a particular subcontractor. And then the risk of delays, overruns, and even the performance is then borne by the main contractor. So, but for us, when we tried to talk to this issue of the subcontractors that are not being paid, whether they are in a form of a co-op or any other shape or form, but at the end of the day, we want to make sure that subcontractors are paid directly. Why they are paid directly? Because we know, we've seen it, that in the construction and infrastructure space, the people that deliver on contracts are subcontractors. The main contractor simply manages, the work, but at the end of the day, the people that are on the ground and make sure that the project is completed are subcontractors. So it is for that reason that we decided that in the draft regulations, we make a provision to pay subcontractors directly. As to how this will happen, we will engage, at least with the accounts payable section, which is another section within the PFMA and the MFMA in the case of local government, to see how do we make sure that subcontractors are paid directly. But from where we sit, there is no impediment. And that's what we want the public to also comment on. If the public says this is acceptable, and definitely that would form part of the draft regulations once they are adopted and promulgated at the end of the day. And lastly, Chair, immediately when the closing date for public comments, come to an end, that is on the 15th of June, then we'll begin to consider all comments and put together a set of draft regulations, which will also be tabled to Parliament for comments in terms of the Act. So that's just a broad issue that I wanted to respond to, Chair, to address the issues of projects that are abandoned, are not completed, and so on as a result of the payments and so on of subcontractors. I just want to bring this to the attention of the committee. Thank you, Chair, and back to you.
Thank you very much for the responses. Selvina, are you done?
Yes, we are, Chair. Thank you very much.
Thank you very much, honorable members. It is now 14 minutes past 11. I want to check if ever there is, okay, I see the hand of Honorable Malmaja. I am now going to be very strict. I'm going to give you only 3 minutes. Let me see if ever there are other members who want to make a follow-up. I'll see by a show of hand or hands. Honorable Malmaja, over to you, sir.
Thank you very much, Chair. The last presentation, it has got some issues that invite a lot of questions. As much as we appreciate the initiative to try and fast-track the payment of the cooperatives, MMEs, and the subcontract in general, the issue here is profit versus deliverable. Because what the presenter is saying, whether the subcontractor has done not enough to meet the requirement in terms of the deliverable, and this contractor can have a pressure, then that particular subcontract can be paid. So the issue of quality assurance kicks in because the main role of the main contract is to deal with the quality assurance to ensure that the deliverable is up to standard and can be paid for. Now, if the money bypass the person that is the one that must certify this and therefore it got paid, then the deliverable is not achieved until think the very same regulatory framework is now worsening the whole situation. I'm just saying this, bearing in mind that you are saying is open for public comment. We can also be going there, but it would be wrong for us to die silent without raising some of the issues that issue of subcontract to be paying directly can be better managed if subcontractors are given work directly, rather to be under somebody who does not necessarily have much rights in terms of holding them accountable, the issue of retention. Because in this case, the very same main contract can be blacklisted for the wrongs that he never did. Thank you, Chair.
Very important, Honorable Malamacha. Thank you. Cecil Vina.
Thank you, Chair. I thought Honorable Malamacha was speaking to this last presentation by Willie. Willie, can you take that?
Yeah, no. Look, Chair, that's exactly why we have the regulations out for public comments. The comment by Honorable Malemacha, it makes sense. I mean, obviously, there would be other comments. And as to how this will pan out, and we are open to comments by the public. But what we're trying to say here is, at least we need to address the issue of payment of subcontractors without necessarily ignoring issues of quality and performance and so on. And the structuring of this whole subcontracting element, within the main contractor and also the employer, which happens to be the government institutions, are something that will take those comments, but at least we've got something that we've thrown out into the public now for comments, and we'll look and consider all comments that we receive. Thank you, Chair.
Thank you very much. Are you covered, Honorable Malamacha?
Chairman, thank you so much. Indeed, I'm covered. Remember, I even deposited that. I'm bearing in mind that is out for public comment. I will urge members to also look on it. And the presenter is very quite neutral. I like that let's come with all these other comments on that, building it to make it work. Thank you so much.
Okay, thank you so much. Take us back to the agenda, Secretary. As you're taking us back, I would want to say to Cecil Vina and the team that we really appreciate their commitment to come into the presentation before this committee. We asked questions and we were well responded to. Thank you very much. On that note, if ever you still have to be with us in this meeting call. You are allowed, but if ever you have other issues that you would want to go and attend to, you are free to do so. We really appreciate, and even in the future, when you come to this committee, we will really appreciate the information that you're having. The only thing that we want to stress is that we want to see the small business development operating with the help of the department. Please make sure that the money is available to our department so that the people are not going to suffer at the end of the day. On that note, I really want to thank you and release you. Thank you so much. We are continuing, honorable members. We are now on the next item that talks to the status of our study tour. Over to the secretary and the team.
Thank you, Chairperson. As we have discussed in the management meeting, of which the Chairperson be aware of, we reported that we have made the application to the House Chairperson for the study tour to Brazil, which we had planned that it should be between the 12th to the 20th of June. What has happened is that we have made that application, the application to the House Chairperson, which had included all members of the committee. And then that political application, it is based on the proposed program that we had an engagement with the embassy in Brazil, of which they are still developing the program. As of last night, they did send me something, the draft program. So now what is required is that we have to find out from the members of the availability of the delegation. And then secondly, the dates that has been we've been working on are the dates of either leaving on the 12th or we're leaving on the 13th, so that you arrive on the 14th of June and then start working from the 15th up until Friday, the 19th of June. Then we come back from Saturday, the 20th, arriving on the 21st. So the requirement is that what is expected from the delegation is that all the members that will go, they are expected to have vaccinated for a yellow fever. And then what has happened that we have learned that this yellow fever should be done 14 days before traveling. So normally what happens is that we know the delegation, we made an arrangement with the Parliament clinic, then they identify the clinic where members can go and vaccinate so that they can have those yellow fever certificate. Because I've learned that out of the vaccination, you get that certificate, which should be presented as part in the passport. Then secondly, members are expected to have the official passport. And then what we've done normally happened is that we do it through the Office of the International Relations here, where they will give us letters and then members will go, they'll make an arrangement here in Home Affairs to fast track the facilitation and the application of the official passport. So Chairperson knows that's the progress so far. And then we will be waiting for the response for that political application from the Office of the House Chairperson, while concurrently we shall be developing an financial application for procuring the flights, the accommodation, and the ground transport, and all things that are required. So of importance for now, then it will be to find out the availability of members and then try to fast track whatever is expected to be done in as far as the requirements are concerned. So I think, Chairperson, I can pause there for now.
Thank you very much, Secretary. Over to the members. There is an update for our study tour. I see the hand of Honorable Kruger. Over to you, sir.
Thank you, Madam Chair. As previously raised my concern, I just want to put our concern on the table again. This is in the last week of registration. That weekend, I don't think even we will be back that weekend for the registration weekend. And for politicians, I think it's very important that we get all our youth registered so that they can partake in the election at the end of the year. So I am of the opinion that the DA won't partake in this tour. Thank you, Madam Chair.
Thank you very much. I am sure there are many political parties in our committee. So if ever the DA is recusing themselves, I believe they will be giving another political party an opportunity to go and learn what is happening in Brazil. Thank you very much, Honorable Kruger. We are noting that. So Secretary will have to notify the Office of the House Chairperson that from the list that you submitted, we are subtracting 2 from the DA. I see the hand of Dr. Malimacha. Over to you, sir.
You covered me. Let me not waste you. Thank you so much.
Thank you so much. I don't see any other hand. Thank you. It looks like we are done with this item, Secretary. So we are on our last item, and I want to thank the honorable members for the way they managed to manage this meeting, so that who are still in the parks, they can be able to go and catch a 12 o'clock bus or 12:30 bus. On that note, honorable members, I really want to appreciate and thank you. Let's not forget to put Siskade Bilankulu in our prayers, because they are busy with the preparation of the funeral, and also to pray for Honorable Sapo, who is on her exam, so that God protect her and assist her. She must go and write well and come back well and be back to our to our organization, our portfolio committee, so that she continues well with the work of Parliament. On that note, honorable members, these are my closing remarks. The meeting is adjourned.
Don't leave the chair.
Thank you.
Thank you.
Thank you, Chair.
Recording stopped.